Well, the coronavirus fears are triggering a flight to safety, and gold is jumping to its highest level in 7 years as investors worry about the global economic growth. You can see gold trading just around 1674. Jared Blikre is with me at the Wi-Fi Interactive board. And Jared, gold really attracting a number of investors over the last several weeks.
Yeah, not only the last few weeks, we'll get to a longer term chart in a minute, but also over the last few years, including central banks. So here's what's happened over the last 10 days. We can see it's up 6.5%, and 1680 is kind of a technical level that we've been looking at, 1680 to 1690 from 7 years ago, talking about those 7-year highs. But to really get a flavor for what's been going on, I want to go to the Gold Trust, the ETF, so we can go back 10 years and just kind of see what kind of consolidation took place here after we reached that peak. This is basically 5 years in the making. And when you have a big consolidation like this and you finally break out, it usually has a lot of room to run. So we could very easily see higher highs in gold in the coming weeks and months here. And a lot of it has to do not only with retail investors, but central banks really piling up on the yellow metal, including Russia and China over the last few years.
And Jared, when we take a look, just dig a little bit deeper into some of these companies, obviously, that are benefiting or really getting a boost, I should say, because of this flight to safety and the interest in gold. Gold miners are actually moving pretty significantly to the upside today.
Yeah, so we look at the VanEck Vectors Gold Miners ETFs, that's GDX, and that's up about 2.5% today. And we can see over the last 10 years, kind of a similar story to gold. So we had this peak that we had about 2011, and then we came down, we consolidated for a number of years, and now we're breaking to the upside. And if we take a look at what's happened over the last 6 months, we can see it's been kind of dicey here. Now the miners, you got to play them carefully. It's probably better to have an ETF unless you're really good at stock picking. But these guys are under a lot of pressure because of the elevated price of gold to return that to shareholders. So not necessarily invest in operations, but do share buybacks and dividends. So because of that, there is operational risk in these companies.
All right, Jared Blikre, thank you.